Good Friday evening, everybody, and welcome to Fonti International. I'm Alexander Georgiev, and we're going to be together for the following 1 hour and a half. I just wanted to show you very quickly the US indices climbing to new record highs. S&P 500, 3,223 points, a little bit more than 0.5% in the green. Dow as well, 0.5% in the green, and Nasdaq Composite 0.43% higher. This is incredible, and certainly we're going to be back on the markets. But first of all, very quick look at the major headlines. US lawmakers approved Boris Johnson's amended Brexit bill, which puts the country on course to leave the EU by January the 31st. The British government turned to a top financial regulator as the next governor of the Bank of England, Andrew Bailey, will take over from Mark Carney in March 2020. France Competition Authority fined Alphabet's Google 150 million euros for unfairly suspending advertisers that placed allegedly deceptive ads, the latest in a series of antitrust probes against big tech companies. That join a clutch of big oil companies that have taken big financial hits because of a global glut of oil and gas. Boeing's spacecraft Starliner did not achieve the proper orbit it needed to reach the International Space Station shortly after the capsule launched from Florida early Friday morning. Once again, Boeing's plan failed. Actually, we're going to talk about it a little bit later on the show. There is a very small impact on the stock. Also, I'm going to show you the stock in a very while, that's for sure, and we're going to discuss it properly. But first of all, I want to start with those new records. As we can see, S&P 500 hitting the 3,223 points. Dow on the other side, 28,510 points, and Nasdaq Composite 8,925 points. And let me tell you that those figures over there are crazy figures. I want to switch to fixed income. So far, US 10-year is yielding 1.91. As we can see, slightly higher compared to yesterday. The 2-year is yielding 1.62, and the 3-month 1.57. Let me show you very quickly also the Forex, the dollar index 97.69, 0.3% higher. Euro dollar 1.10, which is lower as a consequence by 0.4%, and sterling against the dollar 1.30, climbing by 0.2%. Certainly, we're also going to discuss later on the show the Forex, but first of all, let me start with the United Kingdom, because there are many important stories, actually milestone over there. UK Prime Minister Boris Johnson successfully tested his new parliamentary majority today, with lawmakers approving his amended Brexit bill, which puts the country on course to leave the EU by January the 31st. Lawmakers have agreed to the bill in principle, and it will now be debated further by both chambers of parliament early next year. Changes to the bill from October are seen as controversial by many. The new bill would outlaw the new extensions to the UK's transition period, which would run to December the 31st, 2020. This would tighten the gap that Britain has to agree a trade deal with the EU, increasing the chances of a no-deal Brexit. Other changes would see more UK courts being allowed to reconsider laws made by the European Court of Justice. A clause on workers' rights has been removed, although the government has stated that this will be dealt with in a separate bill. Another major story coming exactly from the United Kingdom is the fact that British government turned to a top financial regulator as the next governor of the Bank of England, an appointment seen as a cautious choice for a role that will be critical in guiding the economy as the UK leaves the European Union. The government said Andrew Bailey, the chief executive of the Financial Conduct Authority, will assume the new role in March. He will take over from Mark Carney, a former governor of the Bank of Canada, who has headed the Bank of England since 2013. He is the right person to lead the bank as we forge a new future outside EU and level up opportunity across the country, Sajid Javid, the UK's Treasury chief, said earlier today, as we could see from the images. What is very interesting, I just wanted to explain to our viewers, is that like Jerome Powell, who took over the Federal Reserve in February 2018, and Christine Lagarde, who last month became the president of the European Central Bank, Mr. Bailey is not a specialist in monetary policy. He has held a number of jobs at the Bank of England, including as head of the group that studied the global economy. He left the institution in 2016 to become the head of the FCA, and during his previous stints at the Bank of England, Mr. Bailey wasn't directly involved in setting interest rates, and his views on monetary policy are unknown so far. As head of the FCA, he has been a member of the Bank of England's Financial Policy Committee, which sets the rules for British banks. So certainly He's a guy with a huge experience, but not exactly in monetary policy. This is something very, I mean, we do meet this condition very often so far, considering Christine Lagarde, who has a great past, political past though, not financial past. In order to delve deeper into this topic, let me bring to the show my first guest this evening, Jean Ergas, Chief Economist, Tigers Financial Partners. Good evening, Jean, and thank you for joining us.
Good evening. Thank you to you, Alexandra. It's always a great pleasure, always an immense honor. Thank you.
Jean, I would like to start with the fact that UK lawmakers approved actually Boris Johnson's Brexit bill. What I wanted to know actually is how likely is a no-deal exit?
Well, I think that's a very good point. I think the no-deal exit is certainly much more likely now than it was even 2 months ago or before the election. Before the election, we saw, in fact, a Conservative Party which was not very sure of the majority it would have, was not even very sure at a certain point if it was going to be able to avoid having to face a hung parliament situation. After the election, we have a much more aggressive Conservative Party. We have a Conservative Party which is pushing a maximalist vision, which is not interested in compromise, which sees no reason to compromise with anybody, believes that the Remain brigade have been utterly defeated once and for all and vanquished. Also, I think was largely due to their disunity between them, and they could never agree a common program. And has now decided to forge ahead and says, well, here it is. You know, either take it or leave it. This is my deal. And we're seeing a UK government which has taken a strategic decision. It's very simple, which is the EU is no longer going to be the reference point. The EU will be one of several reference points, one of several interlocutors on the political and trade economic scene, and they're going to restore the special relationship to the US, which was launched, in fact, during the Second World War by Roosevelt and Churchill, the famous special relationship. They're going to put the clock back to 1956 or pre-EU even, I'd say, really in this case, pre-Suez Britain, a great power. I don't know if they can do so or not. And quite frankly, put it this way, this is a divorce where the UK says, I don't really care if we stay friends or not. If you want to stay friends, that's fine. If you don't want to stay friends, we shall settle this formally, but not amicably. In any case, we will continue to trade. So I think it's a very tough situation. I think that, in fact, people say, well, there will be disruption or there will be a very substandard deal. Yes, but, you know, the way the UK government looks at it is like this. I'll use a corporate analogy. They don't say there will be disruption. They say this is like a large industrial group which divests itself of one of its key components because it has decided it is no longer core. So there's going to be a one-off cost of closing factories, one-off cost of severance. We will take that as extraordinary item, non-operating expense on our P&L, and that's it, and we shall just move on. I think this is how they're looking at it. Anybody who does not understand that the priority here is political, it is not economical, it's not the economy, is fooling themselves. This is all about politics. It's about recasting the UK, not only from the economic point of view, but from a political point of view. And if there is short-term economic damage, and by short-term, I mean 1 or 2 years, well, that is irrelevant. These are simply the closing costs, and we shall move on. I think that the EU is not going to play along, and that they've simply had enough. So let's see how it goes. I can expect much more volatility coming up now in the UK sterling and in the UK markets. It is not going to be as simple as people think.
Actually, I shall say that it's stable today at 1.30, more or less like yesterday. Exactly. Of course, our viewers would love to know, what do you think about a sterling?
I mean, I'm not a great fan of sterling for two simple reasons. First, I do not believe that people, especially retail investors, should try to trade FX from home. I think this is very dangerous to your health. And secondly, because I see this enthusiasm where it went from 129 roughly to 136 and then came back, not so much as profit taking, but as people shifting positions. Profit taking, I could have understood a 136 cable moving down to maybe 133. I was like, yes, some of the foam is coming out of this. But now we're at 135, 30. It's falling. I think it could easily break 130. And quite frankly, I'm not a really big fan of sterling, because when people say to me, look, you know, Jean, it's not fairly valued. Fair valued is 150. Now I ask myself, is sterling a value stock? How do we determine fair value? Yes, there can be a divergence between a theoretical fair value and the spot price. This divergence can go on a long time, and as quite frankly, the great economist Keynes said, the market can stay irrational longer than you can stay solvent. I remember people doing tracing paper exercises on the undervalued dollar in my youth, and they were still tracing, on that paper when they went bankrupt. So I think, this is not something you want to do lightly. I believe FX should not be traded under these conditions. If you have a 150 and they tell me that's the real value, well, then I have to rethink my whole construct around the UK economy, because I remember pre-Brexit, when the world economy was in potentially even slightly more brittle condition than it was now, coming out of the shock of the 2016 January oil collapse. Somebody said to me, 150 is very, very, very low on sterling. Sterling is very undervalued. So the undervalued of today becomes the fair value of yesterday, becomes the fair value of today. I think this is a mug's game, quite frankly, and I would be very careful. I will not try to make 3-4% for an enormous amount of risk.
Jean, let's get to the major story today, actually, and the major story coming from the United Kingdom is Andrew Bailey.
Yes.
I've already given some information about the guy. Certainly, he's gonna be
Sure.
very famous in a very short period of time. That's for sure. We're gonna follow his press conferences, no doubt about it. But something important that I would like to point out is the fact that exactly like Jerome Powell and Christine Lagarde, who are certainly great central bankers, that's for sure, but they don't have any experience in terms of monetary policy. In particular, this guy. Is this the new normal to, how can I say, appoint central bankers, president of a central bank without experience in monetary policy?
Well, I think that, they will have some experience just simply by osmosis having sat there, but they're not specialists, that's for sure. I think the point is basically this, the government does not appoint people because they are brilliant technically. The government appoints people because it hopes that despite this much celebrated independence of the central banks, they will play along with the government's agenda. This is what it's basically about. Now, will he play along with Mr. Javid and Mr. Johnson and all their Brexit adventures and actually trying to act as a goalkeeper while they try to play attack against the EU and lose, most probably? That I'm not sure. But I think that's one very important point about this chap, is that he is a career Bank of England officer that they had considered hiring from abroad, like they did with Carney, and they did not do it. And it's very, very important. And that 3, he was the head of this Financial Conduct Authority. Now, this is interesting, but you could say, well, the chap has some good experience regulating, but there have been 2 large scandals in the UK recently. One on the Capital and Finance Company, where they were selling mini bonds, and I think something like 11,000 small investors lost £236 million. And then was the Woodford Investment Fund, where you have £3.7 billion of frozen assets. And plus you have also property funds, where the funds are still blocked. I mean, this is the other side of Brexit nobody wishes to talk about. So in one case, I believe even criminal proceedings have been commenced or initiated. So I think we're in a very complex situation. This is a political appointee. There's no 2 ways about it. They did not like Carney's outspokenness. Carney was not a friend of the Brexit. Carney was not a friend of the Conservative Party. Carney was not going to toe the line. Remember, Carney, I think, must be a very wealthy man by this point. What does he care?
He is.
And they want somebody who's going to toe the line. Will this chap toe the line? I don't know. In any case, what is significant, or maybe symbolic, is that the announcement of this chap's appointment was made in the same room where they announced, Gordon Brown was it announced the independence of the Bank of England 22 years ago, whatever the story was, or one of the governors. So, I mean, there it is. Will they be independent? Will they not be independent? How can you be independent when you are trying to reconcile 2 objectives? Manage to a global cyclicality, let's say the evolution of the world economy, and at the same time manage the exit of the UK from the EU, which is a complete recasting of global and political frameworks, which is relegating the EU from core to maybe strategic light or maybe investee status, and basically having to play off sides and not getting caught. This is called playing offsides, 40 jokers any time, and not getting caught. So it's going to be very tough. This guy, I don't envy this man his job, quite frankly.
And I mean, Bank of England doesn't really have many options so far, considering the Brexit and not the
No.
Brexit. Actually, the problem is not the Brexit. The problem is the uncertainty that the Brexit is causing, because the thing is that they cannot have, how can I say, precise numbers, precise figures. They cannot know how exactly damaging, how much of a damage is going to cause. You know, that's a real problem. So, I mean, how much of an options? I mean, how much of a space for maneuver has this guy, in your opinion?
Well, look, I mean, first of all, let's look at the interest rates in the UK versus the interest rates in the Eurozone, ECB.
Well,
I mean,
I mean, there is a huge...
There's a small, I mean, basically the only difference is this. We have to think in binary terms. We have to think that basically UK interest rates are still positive and ECB interest rates are negative. Okay. Now, there's some people who are saying, you know, why are we fluctuating around zero? What is this policy getting us to? And so on and so forth. One of the policymakers, the Bank of England, Haskell, I think came out with a statement on this today. So I think basically this man is going to be maneuvering around a very small, let us put it this way, fluctuation margin. I think that he will not have much of a choice at some point if the economy continues to weaken, because I do not believe that the level of certainty attained today is sufficient to trigger capital investment in the measure which some have hoped. I do not believe that the CBI members are going to say everything is solved, let's jump in there and build factories right, left, and center. I don't think they're going to do this at all. So I think that we may have to look at sort of reducing rates and being slightly more accommodative, quite frankly, because the UK economy is not doing well. It is bumbling along. The losses potential estimated from the Brexit story are running into the billions. And it was very interesting that they're hiring people because they consider that to be simpler than actually investing in capital, because people in a relatively liberal labor regime in the UK are expendable. So there it is. I mean, a lot of the growth has simply been stockpiling in case of an emergency, hard exit. So I think he's really got a problem on the UK, quite frankly, this man. I mean, it is not as great as it looks.
Oh, certainly. I mean, his term is going to be full with challenges. I mean, it's going to be very interesting to see how are the guys going to manage it. But of course, they have great economies, so certainly they're going to find solutions. Jean, I would like to get back to the U.S. indices
Sure.
and of course, highlight the fact that we're hitting crazy levels. I mean, I can't help it. I mean, I should use the word crazy. I mean, S&P 500 is 3,223 points, Dow 28,500, and Nasdaq Composite 8,987. I mean, how can I say, did you expect these levels at the beginning of 2019?
I thought that basically it would pick up some. I did not know if it was going to actually roar at this point in this way. I think what we're really seeing here is this big liquidity rush which is taking place. People are free riding on what? On the big pension funds. Some of them starting to re-gauge their allocation. They're free riding on this liquidity rush. Now, there's also been a fair amount of optimism because people think, well, maybe the US-China situation will be solved. We saw some more encouraging declarations today. Maybe, you know, things will pan out. Let's look at something else, which was that personal consumption is still relatively solid in the US while inflation is low, which means that you have a situation where you have a strong consumer and you have little risk that there'll be an interest rate increase. So this is all making for good news here. The story really is a US story. The story is not a global story. The story is a US story, and the story is the US consumer, 15% of global GDP. Let us not forget this. Now, as long as it works, it works. When it doesn't work, well, it just stops working, and that's quite unfortunate. But remember, there's no plan B here because the rest of the globe is not doing tremendously well. But I've always believed that this is a closed economy. This is an economy which talks international, acts domestic. This is very important about the US. The story is always about global, but the real action is domestic. This is where the real economy is. This is where the small and medium-sized enterprises are. And this is where most people get their pay packet from. So I think that's basically going to explain it, quite frankly. People are optimistic about the way things are going in this country. They're not even too concerned about the impeachment. They don't see the Senate condemning, Trump and Trump being escorted out by security, quite frankly. So they say, well, you know what? It's a very short-term vision. It is binary, and we have lowered the bar. We have lowered the bar to pass, fail. It's that simple. There's no more grade here. You either pass or you fail. And the passing grade could be minimal, but it's been achieved, and that's basically it. And we'll talk again in 2 weeks.
Jean, let me ask you, what is your opinion on the bond market? Because we saw
Sure.
also, actually, we're seeing very interesting movements over there. For instance, the 10-year Treasury is hitting
Sure.
1.92. Yesterday it was 1.88. I mean, in the range between 88 and 90.
Sure.
Right now the 2-year is 1.63. We do see great difference now, great space between the 2-year and the 10-year.
We do.
Is this, is this meaning that we're not going to see any economic shocks in a negative point of view?
Look, I mean, I think the economic shock at this point, I don't believe in a recession. I believe in a potential slowing. We also saw GDP. GDP is not exactly roaring. I mean, we're not at 10% growth in this country. But I think what the market is saying is basically this. Some event risk has been taken out. The US-China, for example, has been taken out. The central banks being, for example, very aggressive for the time being has been taken out. So we're seeing a steepening of the curve. This is very important. The difference between 10-year and the 2-year, which is often seen as a barometer, has widened. So the curve is steep, and this is also very good, mind you, for the banks. This is why the stock market's also moving, why a lot of people are very positive on the financials. But they say, look, maybe we won't have a great economy, but the curve steepens, you borrow short, you lend long, and you make money. I think what the bond market is saying is basically this, is binary, once again, 0-1. We're not at 0, we are at 1. How strong will this 1 be? We have no idea. On the other hand, there's not going to be a recession. But the actual level of rates is what we look at, and it's extremely low. And if you say, look, I have a strong economy, and the 10 years at 1.92%, correct, and I've got inflation, which is below 2, that tells me something about the level of gearing and leverage there is in this economy, and to what extent, should it be necessary, can the Federal Reserve actually intervene or will want to intervene? I think that's basically it. I think we're looking at very short term, we're looking 3-4 months out, and we are assuming that the US consumer can hang in there, assuming absolutely zero real capex. So I think that's all it's basically saying at this point. It's saying, you know what, no more of this Count of Monte Cristo stuff, which I never believed in, of the inversion. For the time being, it's okay. Now, if something happens on the political front, such as a blow-up, for example, on the US-China, the situation can turn very quickly. If something should happen, for example, on surprise data on inflation or something in the Middle East and price of oil explodes, then we can look at something else. But I think the shock element now is going to be political rather than strictly economic data.
Absolutely, and it's getting very interesting in the US, that's for sure. Jean, let me ask you, what do you expect from 2020? It's going to be a very interesting year. We're going to see the US elections.
Sure.
From one side, we have President Trump, who is not liked from many people, that's for sure. And he's liked from many people. What I was wondering is that, what do you expect from this 2020?
Well, first of all, I expect a relatively decent start to the year, okay? Let's say from the point of view of risk assets. I think they're going to hold the fort. I think more money will come into the market as private investors rebalance, for example, their portfolios, as institutions redo their asset allocation. This will tend to stretch out. And so we'll see a liquidity effect. So I think 2020 will start relatively decently, quite frankly. I think towards the end of January, we are going to start worrying once again about corporate earnings. We're going to start looking at central bank policy again, and we're going to see what exactly the progress is on the major trade fronts, which are very important, including Europe, mind you, because they haven't given up on that one. So I think what I'm going to expect, let's say through the end of January, is decent results, decent risk asset performance, and then a pause. I think this is going to be very important if we have any kind of hiatus there. What do I expect for the year? If things stay the same, I expect outperformance by US. I think the U.S. is still well positioned. The U.S., remember, is not a recovery story, but is a story in which, in fact, the economy has continued to expand. And so you have less systemic risk, for example, than you have in Europe. Europe, there's still the tail of the systemic risk. Here, we believe it is finished. And so we're trading on real fundamentals, cyclicality, business cycle, and earnings and central bank activity. The rest of the year going forward, like I said, I think that risk assets will probably do reasonably well. I will not expect another 2019 for sure. I think we may see some disappointments on the emerging markets, quite frankly, because people will realize that, or negative, let's put underperformance relative to other markets. People will realize that, the China story is basically over, and that the transmission of supply chain activity to other countries is diminishing as a part of increase of GDP. So I think that's basically it at this point.
All right, thank you very much. John Ergash, Chief Economist, Tigers Financial Partners. Thank you for joining us and have a great and Merry Christmas.
Thank you. Same to you, Buon Natale. Thank you. Cheers.
Well, I want to show you Google very quickly because there is a lot going on over there. It's down by 0.2% this evening, as we can see from the chart. Actually, France Competition Authority fined Alphabet's Google 150 million euros for unfairly suspending advertisers that placed allegedly deceptive ads, the latest in a series of antitrust probes and decisions against big tech firms in both Europe and the United States. The French authority said Google abused its dominance of the market for ads displayed in search results by suspending those advertisers in France in a random and unpredictable fashion, imposing significant losses on those sites. Actually, the authorities ordered Google to pay a fine and to stop the brutal and unjustified suspensions of search advertisers and clarify its rules for advertisers. Of course, Google disagreed with this statement from the French authorities, and of course it's going to apply for different decision. We're heading for a very short commercial break, but stick around because in the next part of the show we're going to focus on cryptocurrencies. Welcome back to the Fonti International, and actually welcome back to our crypto focus. I just wanted to have a very quick look at a Bitcoin so far, $7,219, higher by 0.5% this evening. Ethereum on the other side, $127, slightly lower by 0.16%. And of course, very quick look at the Litecoin against the dollar, $40 so far. There are many updates actually in the crypto world this week. So let me bring to the show my next guest this evening, Simone Conti, Head of Sales IDU. Good evening, Simone, and thank you so much for joining us.
Hello, thanks for having me.
Simone, I just wanted to ask you to bring up the latest regarding decentralized finance.
Yes, decentralized finance is growing really fast, and there are tons of applications that is burning in this in this sector, and there are an important transition. There is an important transition even today on MakerDAO. For example, MakerDAO migrated its tokens, his X DAI that now is called the SAI in the new DAI, and the lending rates for this DAI were, let's say, not so high, were lower, far lower than the SAI, and today the lending rates of DAI went up the SAI. So this is an important milestone for the MakerDAO today, especially because this week they, let's say yesterday, they raised $27.6 million from two venture capitals. And this is an important milestone for all the DeFi sector. I'm talking about MakerDAO because it's 50% of the market of DeFi, but generally speaking, DeFi market is growing a lot. If you calculate, for example, the Ethereum locked in the decentralized finance applications, we are in the top. We are approximately at 2.8 million of Ethereums, of the total Ethereums locked in decentralized finance applications.
We will be back on the topic, that's for sure. But first of all, I want to discuss the fact that actually, as far as I know, in a few days, with IDO, it's going to be possible to access DeFi by SEPA. Of course, I just wanted to explain what is SEPA to our viewers, single euro payments area. Is this correct?
Yeah, definitely, this is correct, and we are among the few wallets in the world to make this possible, let's say, so fast and so easy. So everyone is attracted by these lending rates of 5%, 7%, especially if they have their money in the banking account where the interest rates are zero or, let's say, negative interest rates. And they want to be part of this DeFi sector, DeFi movement, and they don't know how because they are not crypto investors, but they are traditional investors. And what we give to them? We give the instant
well, we have
do a bank transfer, and in like less than 50 seconds, we receive that bank transfer, and they can enter in the DeFi world with a bank transfer. Before it was the normal bank transfer, and right now is an instant bank transfer, is an instant SEPA. But it's not possible just to buy Bitcoin with the instant SEPA, but they, with the instant SEPA, can buy directly the DeFi instruments. This is the important point that they do reach this the last weeks, and we are among the few wallets in the world to have this kind of feature.
Exactly. On the other side, actually, I was reading here at Cryptonomy something very interesting that you've just mentioned. Actually, the DeFi pools has reached a new all-time high for the number of Ethereum
Yes.
locked in decentralized finance tools, and as you said, 2.75 million, equal to a dollar value of almost $290 million. So can you explain the dynamics over there?
Yes, for sure. Decentralized applications, it consists in recreate what it works in the financial world in a decentralized way, so without a central counterparty. Trustless applications, let's say. So, for example, for the lending, that is a basic function of the financial world, we are substituting the bank with a smart contract in the blockchain. So there are no more banks, but just smart contracts, so code in the blockchain. And the lending function today in the blockchain works with a collateral, and this collateral is covering more than one times the loan taken, the loan borrowed from the users. So for doing a loan, for borrowing money, the users right now, they have to lock Ethereum. And they locked today 2.8 during the last months, obviously 2.8 million of Ethereum, and it's a lot. So the Ethereum locked, it's let's say a benchmark that express the growth of the decentralized finance applications, because for using decentralized, so DeFi applications, you have to lock Ethereum or you have to lock any other crypto for using. And today we are in the top, 2.8 million of Ethereum locked. And let's say when I was here, I think 4 weeks ago, there was also the top. So it means that we are growing really fast because we are always at the top.
Well, that's amazing. And in your opinion, which are the new targets at this point?
I don't know, but we are growing really fast, and these percentage growth week over week, it's really incredible. It's really incredible.
Well, let's talk about MakerDAO and venture capital entry, because you just started to talk about it a little bit earlier, but of course I've interrupted you because I wanted to focus on the DeFi for a second.
Yes, so MakerDAO is an important player, but also innovation in the DeFi industry, because it's like a central bank without a bank. It means that they have a token, an own token that is called Maker, and who owns this token can participate in the governance of this blockchain bank. And how it works, this blockchain bank. So someone in the world can put Ethereum in collateral, as collateral, like we said right now, and can lend DAI. And the DAI is an algorithmic stablecoin, so that it's pegged to the USD value, but is collateralized by Ethereum, so the Ethereum locked. Just to give you an example, 1.4 million of that 2.8 million of Ethereum is locked in a DAI, in a MakerDAO, sorry. So it means that the people locked 1.4 million of Ethereum to borrow more than 100 million of DAI. So they, let's say, have 100 million, more than 100 million of debt outstanding. Who have this Maker, that is their own token of MakerDAO, can decide about the features of this bank and the monetary policy of the DAI. For example, the stability fee, that is the fee that the borrowers have to pay every year, and to the monetary policy of DAI. And in a MakerDAO, one of the main investors of the last years was Anderson Horowitz, one of the most important venture capital in this space, and he holds the 6% of all the MakerDAO, the entire MakerDAO supply. What's happened yesterday is that both Dragonfly Capital Partners and Paradigm, two venture capitals, both $27.5 million of Maker, so approximately the 5.5% of the total supply. And it's important, this point, for two reasons. So the first one is that a venture capital is investing 27.5 million in so with a valuation approximately at $500 million in a MakerDAO to have a token that is a governance token but is not comparable to the equity. And this is really, really interesting. And the second point is that with the Dragonfly Capital Partners in the governance, that is a venture capital really focused on the Asian market, MakerDAO can try to extend their user base also in Asia. And it will be, I think that we will see a lot of surprises in the next months related to the MakerDAO project, and it is opening these Vici frontiers also to other DeFi projects.
Are you preoccupied that the People's Bank of China is about to launch their own cryptocurrency?
Yes. I think that there will be a sort of, let's say, a closure of the China to this kind of instruments, because they are doing their own cryptocurrency, and this one is a decentralized cryptocurrency. So it means that they cannot control over the money, over the monetary policy. But given the historical actions that they did, I think that they prefer to have a sort of control on what happens related to the monetary policy inside the country. So I think that they will avoid this kind of penetration in China. But in the rest of Asia, I think that, for example, in Vietnam, in Southeast Asia, it could be really, really interesting.
Certainly. Simone, let me ask you, what are you guys up to in IDO?
So one of the main things that we did in the last weeks is the staking program, and it means that
exactly. I knew you were going to talk about it, so I was about to ask you, can you first of all explain to us, because here there is staking versus lending versus holding. This is very interesting article for all the crypto lovers that they can find on the cryptonomies. But can you first start with explaining exactly the difference between the three terms?
Yes, let's start from the easiest one, that is holding. Holding, it means that when you buy something, let's say, for example, I buy Bitcoin and I hold Bitcoin. It means that I believe in in that crypto, and I'm not going to sell for a long time period. And I'm a holder. Bitcoiner says hodler, but it's another story. And another thing is lending. Lending, it means that, for example, I have DAI, I have Tether, I have Ethereum, and I want to earn some interest rate, and I am available to lend my Ethereum to anyone else. So, for example, when I lend through Compound, that is a liquidity pool, a decentralized liquidity pool, I can put my Ethereum inside this liquidity pool, and I'm lending this my Ethereum to other people that pay over the usage of the Ethereum. So borrowing the Ethereum, they pay, for example, an interest rate, let's say 2%, 3%, and I have that interest rate. So I'm lending my Ethereum. So I'm not having my Ethereum, but someone is borrowing my Ethereum and paying an interest rate. Staking is different because I'm earning a rate, that's a staking rate, or sometimes it's called also inflation rate, and is when you stake, when you store the tokens inside your wallet or inside a smart contract network, or for other specific reasons. And for example, in our case, in Edu case, we are trying and testing how the staking is approached by our user base, because we are going to change our token economy over the next year, and this is an important thing that we are going to do the next year. We are evaluating the staking as a part of the new token economy, and we are evaluating in this way with the staking program that we are doing now, and I'm going to explain now, if the people are attracted from this or not. So what we are trying to do is what we are doing. Is a staking program.
So you're now going to explain us like the future launches for IDO, the future projects, right?
We launched the last week, but it's still ongoing. It's still active, and it works like this. It's pretty easy. It means that the users can deposit EDU tokens inside a smart contract. So they have to open an app and they just to click on stake. It means that they are moving their EDU in a smart contract. and they are locking the ADU that they stake for 12 months. It means that for 12 months these tokens will be locked in our smart contract and no one can access them. And they will earn the 24% interest rate over the year, approximately 2% every month. So if you have, for example, $100 of ADU, let's say 100 ADU today, if you put this 100 ADU in this smart contract, so just clicking on stake in your application, at the end of the year you will have 124 ADU. So approximately you will earn like 2 ADU per month. And if this will be successful, and if the users like this kind of strategy, we are going to implement this in a cool way in our token economy in the next year.
So it's a kind of pop-up project. I mean, something like a test.
It's for real. It's for real. I mean, it's real. People are earning interest, and if it's a successful this kind of test that is real, I mean, we can extend it in a huge way.
All right, and then remind our viewers where they can have more information.
Yes, for sure. They can go over our international chat of Telegram. They just click on edu.io in their Google Chrome or in Safari or the browser, and there are the Telegram chat below on the page.
On the other side, I was wondering what's up in 2020 for IDO? Or I mean, can you share with us some of your future projects?
Yes, ADU will be present in Ethereum Denver. That is the main conference over the world in Ethereum space. We are going to have a speech there, and ADU will consolidate this. It will be two ways. So the first one, a consolidation of this DeFi position, let's say the simplest gateway for DeFi applications. And the second way, for those companies that are going to find a new alternative, innovative fundraising method, we are providing the solutions. Thanks to security token offerings, we will be able to do the security token in our platform, Edu Crowd, for any company, let's say, in an easy way, and investors from all over the world can see the projects and buy their tokens.
Simone, let me ask you one last question, and it's regarding the cryptocurrencies, because we saw major movements over there in the last few weeks, I shall say, probably 1 month, especially for the Bitcoin. It's been a roller coaster. If you have a look at the chart, it's crazy, the movements over there, several spikes. What is the outlook in your opinion? Do you think there are better times to come? Are we going to witness the same volatility?
What is, sorry?
I mean, do you expect the same volatility, crazy volatility for the Bitcoin in 2020 or not?
I think that in 2020, for the Bitcoin, for example, there will be lower volatility. And I explain to you why. Because 2020 is a crucial year for the Bitcoin. Because in May 2020, it will happen the halving. It means that the reward that right now the miners earn every 10 minutes, we're going to be, let's say, halved. So if right now they earn 12.5 Bitcoin, in 2020 they will earn 6.25 Bitcoin. So it means that the inflation of the Bitcoin will dramatically decrease. And this could be accompanied by an increase of the price, but I'm not expecting an increase of the price, let's say, after the halving, imagine in June. Because this decreasing of the inflation, it will be possible to see the effect in over the next months. So this decreasing of the inflation will reduce the volatility in the beginning, and then in a medium long term period, the price of Bitcoin, in my opinion, is going to be higher than now.
And what do you think about the Ethereum on the other side? I mean, so far, as we saw earlier together with you, it's becoming more and more important cryptocurrency. I mean, are you bullish on it?
Yes, I'm bullish on the usage of Ethereum, and I'm not sure on the price, because Ethereum right now is the space where more things are built. Is a blockchain that have an economy above this blockchain. There is. Even if I consider, for example, right now Bitcoin more safe, more investment asset class, Ethereum is the blockchain where more things are built above, and it means that if you, for example, see the price, the chart of the price of Ethereum, even Ethereum, it's like a roller coaster. But
it is. I mean, it is. I do see the chart, and actually, we're showing it to the viewers. It is definitely a roller coaster. I'm just going to show the chart 1 year. Here it is.
Yeah, if you compare, for example, there is one chart that for example, I saw yesterday in the news flow, and it was really interesting because there was the price of Ethereum, that is like a roller coaster, and the usage of the Ethereum blockchain. And if you compare the two things, you can see that from the top, from when Ethereum was like $1,000, the usage has not been reduced from the top. So the usage is at the top and is stable. Is not has not reduced over the previous months, but the price did. So if we continue like this, I think that Ethereum had a good, will have a good chance to increase also the price, but for sure it will be a blockchain, the most blockchain used in the space.
All right, but I mean, can we imagine price levels for the Ethereum similar to the Bitcoin's one?
I don't know. It's an hard question, this one. If you compare, I don't compare the price. Generally speaking, I compare the market cap, and Ethereum market cap could be higher. I don't know that if it can be like the Bitcoin ones or even higher. I mean.
That's very interesting. All right, thank you very much, Simone Conti, head of sales Aido. Thank you for joining us, and have a Merry Christmas.
Thank you to you. Happy holidays. It's always a pleasure. Bye.
Well, we're heading for a very short commercial break, but stick around, guys, because in the next segment, we're going to have a markets outlook for 2020. And not only we're going to focus in particular on the biotech sector, which has been doing great job in the last year together with the energy sector. Welcome back to chart analysis. Very quick look at the US indices so far. S&P 500 is 0.5% higher, Dow as well 0.4% higher, and Nasdaq Composite 0.46% in the green territory, 8,928 points. What is really interesting is that the VIX index is lower by 0.16% in the 12.48 level, ever lower levels for the VIX index, which is not certainly option traders are not very happy with this fact. The FANGs are doing great job. Facebook 0.22 in the green, Amazon as well 0.3% in the green, and Apple 0.3% in the green. Netflix 1.62. I shall say that there are 5 days in a row of a major Netflix rally. Today we do see a little bit of slowdown, but still great levels over there. $337 per share, and Google down by 0.15%, getting once again getting fined, but this time from France. We're going to talk about a stock, that's for sure, but first of all, very quick look at the major headlines. UK lawmakers approved Boris Johnson's amended Brexit bill, which puts the country on course to leave the EU by January 31st. Andrew Bailey is the new governor of Bank of England. He will take over from Mark Carney in March 2020. France Competition Authority fined Alphabet's Google 150 million euros for unfairly suspending advertisers that placed allegedly deceptive ads, the latest in series of antitrust probes against the big tech giants. Royal Dutch joined a clutch of big oil companies that have taken big financial hits because of a global glut of oil and gas. Boeing spacecraft Starliner did not achieve the proper orbit it needed to reach the International Space Station shortly after the capsule launched from Florida early Friday morning. Actually, Boeing failed, and I'm going to show you a little bit later the stock and the stock reaction of this failure, if we can call it failure, because certainly the task was pretty tough, no doubt about it. But I want to have a very brief markets outlook, in particular about the biotech sector. So let me bring to the show my next guest this evening, Matthew Malley, Managing Director at Miller Tabak. Good evening, Matt, and thank you for joining us.
Great to be here, Alex.
So I just wanted to, I was wondering what's behind the biotech rally, and I want to bring some stats to our viewers. For instance, the Nasdaq Biotechnology Index gained 22% so far this quarter. I'm talking about the last quarter of 2019, far outpacing the S&P 500 7.7% gain. On the other side, the recent rally has helped the biotech index recover from a third quarter decline, bringing its year-to-date performance to 25%, nearly in line with the broader index 28% advance. And talking about single stocks, I just want to show to our viewers few of them. For instance, Underlying Pharmaceuticals, let me know if I pronounce it correctly. The company soared more than 47% this quarter. And of course, the FDA recently gave approval to its new treatment for a rare genetic disorder called acute hepatic porphyria. And on the other side, another stock that I wanted to show to our viewers is Vertex Pharmaceuticals, which climbed 29% the same time. I'm talking about the last quarter. Matt, I was just citing two stocks, but there are many of them, that's for sure. Great levels over there for the last quarter. What's the reason?
Well, it's a couple things, but the main thing is this is a very political group, especially in the year and a half before a U.S. Presidential election. We saw this, back in the previous election, back in 2016, about a year and a half before that election, in the summer of 2015. The group got hit hard because Hillary Clinton came out, said some very harsh things about drug pricing, and that just clobbered the group, caused it to sell off pretty significantly over the next 6 to 8 months. And of course, everybody thought that Hillary Clinton was going to win the presidency. And then similarly, this year, the group got hit a little bit, and you mentioned in the third quarter, when Elizabeth Warren looked like she was gaining a lot of traction, not only within the Democratic Party on that side of the election, but also in her polling versus the president in a general election, in a one-on-one contest. And this, again, she and Bernie Sanders are much more liberal, and of course, it was that Medicare for all was one of the issues, and so that really hit the group a little bit. Once her standing in the polls fell pretty dramatically, And part of the reason for that was for this particular issue, the Medicare for All issue. She's had to backpedal on that. So people are like saying, "Oh my gosh, she's certainly not in the lead." And even if she does move back to the lead, she's not going to be as harsh on the drug companies as she has been in the past. And then, of course, we have on the Republican side, we have President Trump, who's going to run unopposed on his side. But he's moved up in the polls a little bit. He's got the phase one deal on the trade situation. He's got the Fed behind him, at least right now. So there's a lot of things on the political side of the matter that helps this group. One last thing to mention, though, is that as it moves higher, we need to be a little careful as we move into February and March when we get the Democratic primaries will start taking place, and somebody in that time frame will start to move to the front of the pack. And if it looks like he or she can give President Trump a serious battle, the group might just start to come in. So it looks really good right now. A lot of good news on the stock. They look good on the charts. But be careful as we get into the springtime. It might get a little extended there, and you might want to pull back from the group.
No, absolutely, because that's the interesting thing, the huge difference between the performance of the stocks in the third quarter and in the fourth quarter. On the other side, you know what I was wondering? I just wanted to point out for our viewers that according to the Wall Street Journal polls, in terms of Democratic candidates, Joe Biden is still at the first place. I don't know if you agree with this poll, that's for sure. There are many polls and they are indicating different results, that's for sure. But in case we would get a Democratic president in 2020, what does it mean for the sector? As you said, that it's very politically dependent.
Right. I think. Well, again, it depends who it is. I mean, if it's Joe Biden, it would be less of a problem.
Well, then if it's Elizabeth Warren,
then we've got real problems. I mean, it's even though she's stepped back her rhetoric about the deal. She hasn't suddenly changed her beliefs, and it would raise the odds of some sort of drug pricing controls coming in, would raise them considerably, and I think it would be very, very tough for the group. So if she moved up in the polls and looked like she was going to get the nomination, and then if it looked like she had a serious chance of beating President Trump, it would definitely be, I think, would hit the group rather hard. So it's something you want to watch very carefully. And but if you get somebody like Joe Biden or even a Michael Bloomberg, they're much more moderate. I don't think it would be quite anywhere near as negative for the group.
And actually, talking about Mike Bloomberg, where this guy disappeared. I mean, we don't hear anything about a guy.
Well, he's an interesting. Well, he's running a very interesting campaign because he's not going to run in any of the first four primaries, and he's really concentrating on what they call Super Tuesday, where they have this huge number of delegates will be decided, including in states like California, which has because it's the most populous state, would really get him a lot of delegates, and his hope is that he would really gain a foothold right there. I think most of the experts are saying the fact that he's moved up in the latest poll I saw was 7%. That seems quite low, and it actually is quite low. But until we really get past Super Tuesday, he has plenty of money. I mean, one of the big things that people do in the presidential politics is if they lose early in one of the first two primaries, people stop giving them money and they have to pull out. Michael Bloomberg is not going to run out of money, so he can stay in for a while, and I certainly would not discount him. I think he's got a much better chance than people think he does. I'm not saying he will win or even predicting he will win, but he's when you have enough money to stay in the battle, it leaves a lot of things open. This is going to be a much different campaign than we've seen any time in the last 25 years.
Exactly, it's very different campaign. That's why I was asking your opinion, because I mean, is the money the factor now in politics?
I'm sorry, what?
I mean, are the money, because you've mentioned that he can afford it. I mean, how is he gonna get the votes with the money?
Well, I mean, it enables him to get his message out there, and the main thing he's trying to portray, because he does have a very successful resume on his business background.
Oh, that's for sure.
He was a very successful mayor of New York, and that is that's a big. I mean, even though he's only just a mayor, that's a big job. It's obviously the biggest city in the United States. And he has, I guess my thing is that he has a lot of the same business. His programs are very pro-business, just like President Trump's are. But he doesn't go off the handle. He doesn't go on Twitter and say wild things. So some people, I think he's hoping to bring in some people from the Independents and the Republicans who say, "Geez, I really like Donald Trump's policies, but I don't like his antics." So a guy like Michael Bloomberg it would be a good compromise, and that's what he's, I think, hoping for.
On the other side, Matt, I would like to switch to the energy sector because there is a lot going on over there. For instance, Royal Dutch joined a clutch of big oil companies that have taken big financial hits because of a global glut of oil and gas. Shell said today that it would take an impairment charge of around $2 billion and warned of lower margins in its refining, chemicals, and retail businesses. Given the weaker economic outlook, the company did not offer details about a post-tax impairment charge, but analysts said it's likely linked to lower projections for gas prices. Shell also indicated up to $1 billion in additional charges from well write-offs, decommissioning costs, and deferred tax charges. I just wanted to point out that Shell's announcement follows a write-down of more than $10 billion by Chevron, not only the Spain's Repsol, the UK's BP Prime, and Norway's Equinor. I mean, I should say major slap for the energy giants all around the world, not only in the US. So I just wanted to point out something very interesting. For instance, ExxonMobil, the giant, I'm talking about the major giant, here it is today, actually a little bit more than 0.8% higher. Back in 2009, was the first company in terms of market cap on S&P 500. 10 years later, 2019, is the third in. I mean, being the third in company in terms of market cap of S&P 500 is spectacular, no doubt about it. But can we, how can I say, expect a major comeback of the energy companies like the old good times? Let's call it like that.
Yeah, I think that the potential is certainly there. We've talked about in the past how crude oil, that these stocks, a lot of these stocks, not just in the U.S. but around the globe, have been trading at a big discount to the underlying commodity, to the price of crude oil. And now that we have crude oil rallying and seemingly to hold that rally, this is, I think, going to be very, very bullish for the group. And obviously, individual companies can have their problems, but we also do have to remember we've seen a couple of companies like Royal Dutch who have taken these massive write-offs and things. That's sometimes, and actually somewhat frequently, can be actually a bullish sign, because what they do is like, hey, let's just throw the kitchen sink. Let's take care of all the problems right now, bite the bullet, especially at a time when oil prices are finally look like they're getting a little bit of a boost. Let's just let's get it all out there, and that many times is a signal that, hey, things are actually about to get better, because what we see a lot of times in any company when you get a new CEO, he comes in, especially if he comes in from the outside, they really want to make sure they kind of get the past behind him. So sometimes these charges are a way for the company to get the bad news of the last couple of years behind them, and I think that might be the case here too. So it's not necessarily a negative call, a negative development when these things happen, but again, we're going to be at the mercy of oil prices, and right now they're finally, not only are they rallying a little bit, but they spent several months building a nice base above $50, and that's always a good thing too. When you get a sharp rally, sometimes it can't hold, but when you get a rally like we've had recently that comes after a nice base has been formed, that's usually very, very good on technical analysis. And let's face it, the commodities traders are the ones that invented technical analysis, and that's something they watch very closely.
And are you bullish on the sector? I mean, what are you going to do in 2020? Are you going to stay away or get closer?
No, I think it's a group that can outperform next year. And, again, the fundamentals of this group do not have to improve a whole lot for the group, for these stocks to rally, because they are very underowned, and just people just saying, geez, I got to get more in line with the rest of the market because this group is rallying. You get institutional investors who are underweight the group in a major way. They don't even have to get into overweight. We don't have to have oil go to $100. Even if they just realize, oh my gosh, oil is settling in, and especially if we get a pullback in these technology names that have acted very, very well, but they're really getting ahead of themselves. People have to reweight their portfolios in such a way that takes their weightings in energy stocks just to a market weight. And if that happens, that gives it a lot of upside potential. So I always love when the risk reward does not depend on a massive rally in the fundamentals. All it needs to see is a continued stabilization and slight improvement because the stocks are lagging so badly. And so I think this could be one of the biggest home runs for 2020. Of course, you always want to have some tight stops if crude oil starts to roll over. But when overhated groups finally start to get some good news, like the oil sector has recently with the bounce in oil prices, that usually bodes well for the following year.
Actually, today is not the case, because I shall say the WTI is down by 1.21%. What's the matter today?
Well, it's like anything else. No market moves in a straight line, and it's had a nice little rally over a short-term basis. So, again, if this little sell-up turns into a bigger one, yes, that's going to be a problem. But it's had this nice run. We're going in front of the weekend. Traders, especially the markets are very thin as you move close to the holidays like this. A lot of traders are there, and some of them are like, hey, Jesus, coming into a weekend, coming into a holiday, I want to flatten out my positions because these guys are all short-term oriented. They want to flatten out their positions and then come back early in the new year. And since it's been moving up, that means they've been long recently. They've bought more oil recently, so they're selling off a little bit just so that they don't get caught if there's a big movement over the holiday.
Matt, I just wanted to ask you, what about Tesla? Because there is something very interesting in your notes regarding Tesla. Have you changed your positions?
Well, it was funny. At the beginning of this week, I sent out a note saying that on a purely technical basis, the stock looked like it was getting very toppy. It got up to the $380 level, and that had been it tested that level 4 or 5 times over the last couple of years and wasn't able to break it. So that was really, really key resistance level, and it was getting very overbought on the chart. So I thought it was going to have a very tough time breaking above that level. However, I was smart enough to say, don't go short the stock, don't sell the stock, because obviously this stock has a lot of momentum. Has a lot of momentum. Number one, number two, the overall market I thought would rally and continues to rally into the end of the year, and it did break that $380 level. That's on a technical side anyway, is a very bullish development, and we'll want to see if that. Sees more upside follow through as we move into 2020. The one thing I will say is that, of course, this has been a volatile stock for several years now, so we could see sharp declines. But if we go back down to test that 380 level, it'll be very interesting to see if it holds, because if it does, it's going to have a lot of upside. But there's no question on a technical basis, the break above $380 is a very bullish development.
I want to bring you the latest regarding Boeing. Here it is, down by 1.06%, but there is something interesting regarding the company. Actually, Boeing spacecraft Starliner did not achieve the proper orbit it needed to reach the International Space Station. Shortly after the capsule launched from Florida early Friday morning, no people are on board the capsule, as the flight was planned to be one of the final key tests before Starliner flies NASA astronauts. NASA Administrator Jim Bridenstine identified at least part of the cause of the issue, saying there was an anomaly. Starliner believed it was in an orbital insertion burn. The spacecraft burned more fuel than anticipated to maintain precise control. This is what Bridenstine said. This precluded a rendezvous with the space station, Bernstein added, meaning it will not be able to reach the space station. Actually, do you think this decline for Boeing is because of this story, or there is a completely different reason? I shall point out that it's been a terrible year for the stock, but still levels are great, aren't they?
Yeah, the stock continues to hold up pretty well, and as you mentioned, yes, I think today people, investors, again, we're going into the holiday. After today, the market's going to be very, very thin for the next 2 weeks, and I think there's some people, maybe some people who bought it recently at its near its lows and have got some nice profits in the stock. Even though the stock's come down, it's still a little bit above where it was, and they're just saying, I just want to, or even people who bought it recently say, I don't want to take the chance over the holiday. I don't think this issue, what this development is a major development. The long-term issue for the stock, or at least the intermediate-term issue for the stock, is going to be whether the 737 can get back up and running and that people will actually fly in the plane. And the one thing, again, I'm going by what I heard today from Boeing, from a representative from Boeing, is that again, when you ever say, oh, it wasn't a complete failure, it initially sounded like they were just making excuses that it was actually kind of a disaster. It wasn't. I mean, at least the way that Boeing described it, they're going to be able to recover a little rocket. It's going to be able to fly back and land. Number one. Number two, in an odd way, is that if there had been astronauts in the rocket, they would not have been hurt. Number one. Number two, they would have been able to switch it over to manual and gone on with the mission and been able to go dock with the space station. At least that's what they say. Again, I don't think this is a big deal. I think it was just a situation where people were like, just another negative news out. I'm tired of the short-term traders all said I want to get out of the stock. Long-term though, it's I've said many times I'm surprised the stock isn't worse. I'm surprised the CEO isn't getting more. Frankly, I'm surprised he still has his job. The stock should probably be lower, but they are important to the government, so they're not going to get the government's not going to go after them the way they would otherwise do, because it's the only they're one of only two companies that do what they do in the world.
Absolutely. Their products are very particular, no doubt about it. Matt, what are you looking at in 2020? I mean, where are your eyes?
Well, I mean, the one thing I do, it's interesting because one of the things I was really looking for and had been saying really since about August, that the markets outside of the U.S. would really look pretty good. And that has worked out since then, and we've seen emerging markets rally nicely. We've seen Europe outperform the U.S. after spending the first 7 or 8 or 6, 7 minutes, about 7 or 8 months of the year badly underperforming. Now they played catch up. My one concern is that's becoming a very popular theme. I mean, a couple of months ago, I was one of very few people who was saying that, and it's worked out very well. But it's now becoming a very popular thing. When things get crowded, you always get a little bit worried about that. But I do think, especially in the emerging markets area, that's going to be an area that people are going to be able to do well, especially if the dollar sees some weakness, which I think it can in the new year. But I am worried about the U.S. stock market getting ahead of itself. It could be a rough start in the first quarter, just because we've gotten so extended and ahead of the fundamentals. It's when we go into the first quarter, we're really going to have to see how these earnings look, because we had basically zero earnings growth in the fourth quarter. If it looks like it's going to be a mediocre year, it's going to have to be a good year next year to see any kind of outsized move in the stock market. So I'm looking more towards, as we talked about, the energy sector, some of the ones that are finally starting to play catch up. The energy sector, the bank stocks, which move up if interest rates move higher, or long-term interest rates move higher, which I think they will. So I'm less enthusiastic about the tech area than most people could. I think it's too extended. I think you look at some of the ones that have been underperformed in 2018, they could do very well. In 2019, and will do very well in 2020.
Well, that's very interesting. Thank you very much, Matthew Malley, Managing Director at Miller Tabak. Thank you for joining us, and have a Merry Christmas.
You too. A very Merry Christmas and Happy New Year.
Well, that was the last story for this evening, guys. Thanks so much for watching, and see you live on 27th of December. Have a Merry Christmas.